Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 28th of December 2016 and we're commenting on UK investors still flocking to the stock market as its favourite form of investment, despite the FTSE 100 index standing at 7,068, only marginally below its 52-week high of 7,129. Reuters' monthly survey of 13 UK-based investors, carried out from December the 15th to the 21st, showed funds increased their equity holdings to 45.4%, up 1 percentage point from November, and reduced their cash positions to 7.5% from 9.6%. The main motivation for this is based on US President-elect Donald Trump's plans to cut taxes and boost spending, which has already pushed Wall Street to record highs, with financials, energy, materials and infrastructure stocks all expected to benefit. Mouhammed Choukeir, the Chief Investment Officer at Kleinwort Hambros, stated, quote, "Equities are attractive in absolute terms, with reasonable valuations and positive momentum. They also remain attractive compared to the other core asset classes. As such, we continue to be risk on," unquote. Peter Lohman, Chief Investment Officer of Investment Quorum, said that whilst equities in many parts of the world were not cheap, they were still better value than bonds. He argues, quote, "Therefore, any worthy pullback could be greeted by a wall of money that could exit from bonds and cash that is currently sitting on the sidelines," unquote. An interesting comparison to this is a report published by the Confederation of British Industry, the CBI, which states that UK retail sales volumes rose at their fastest pace since September 2015 in the year to December. However, it expects retail sales growth to slow down next year as a result of the falling sterling prompted by the Brexit vote in June. In addition, according to the Office for National Statistics, November's Consumer Price Index, or CPI, inflation rate was the highest since 2014, when it stood at 1.3%. And the Bank of England has already forecast much higher inflation rates for 2017. Despite all of this, the general investor sentiment is directed towards stocks. And while this continues, it will have a dampening effect on precious metal prices. Now, we know there will be many of you sitting there saying, "Ah, yes, this is exactly what was said just prior to the market crash in 2008. And we agree. However, we are not seeing the same level of private investors ploughing their savings into the markets, but mainly institutions and funds. And so do not believe that this is the moment the stock bubble is due to burst. A correction may be, but bursting, not yet." We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views